I want us to do risk of material misstatement at an overall level. This is this shouldn't be hard. This should be one of the easiest things you can do, right? Why? Because there are triggers that I want you to go into that exam with. So the triggers that I want you to go into the exams with are, you need to look for this. When you look for this thing, this is how you word them. So there are certain things that if they are always there, you must always think of, okay, this therefore is a trigger for risk of material misstatement and increases my risk of material misstatement. What really is risk of material misstatement at an overall level? Those are things that or indicators that we see that we could say they increase the fact that there is an error in your misstatement just by looking at this outside, right? Just by looking outside at what really is happening. You don't have to go into an account. The moment you start going into an account, then you have a problem because it's no longer at an overall level. It is now very specific. When something is very specific, this is at an accession level. So if it's at an overall level, this indicators are there to say there might or there is a very high chance that there is a misstatement due to error, right? The financial statements have an error. Or because of these things that I'm seeing, it creates or it opens an opportunity for those at management level to create or to commit fraud. So when you look at these things, you're like, these things mean that I must be more aware of certain things. So what are those factors and how do I don't want you to just know the factors. Sometimes we already know from undergrad, we know those factors, but the issue the issue really is how do I word this to make sure that I get all the marks, right? And how do I make sure that one thing gives me the biggest or so many points? So one of the things that you should look for is this a group, right? If this is a group company, right? If this is a group company, therefore there are so many things that you'll say because this is a group or this is consolidation, this increases my risk for error. What are those things that are there when you look at a group? When you look at a group, there's all the things that can bring about an error because by the mere fact that this is a group, is the fact that one, interrelated or group transactions, uh, group related transactions have not been eliminated or reported for in terms of IS 24. Do you see that this is not a specific balance? This is just me looking at the entire whole group to say this is a group and there is a risk that what? There's a risk that the related party transactions are not at arm's length. Remember, we want things to be at arm's length, right? There's also another risk that we as the auditor will not be able to identify all interrelated party transactions. Remember, when you walk in as an auditor, you do not walk in with the purpose of what? With the purpose of auditing 100%. Like it's just impossible, right? What also does this mean? Related party transactions, they give quite an opportunity for the companies to manipulate the Fs in order to increase profit and reduce cost, right? So the other thing when you're just looking at groups, you can then say that if applying IFRS 3 or IFRS 3 consolidation or business combination is complex in its entirety. Groups are difficult. Therefore, this increases the risk of error. Do you see where this is going?
Hi, Lori.
Hi, Lucinda. I'm just going to write it down. Mhm.
Um, Sorry, I just quickly wanted to ask, so when they ask you to describe or list or whatever, or discuss like risk of material misstatement at an overall financial statement level, is it like you don't like the risk isn't like, how should I say, it's not in your face in the scenario to say that the management didn't see this risk or whatever, but just by them mentioning that this is a group company or forms part of a group, then already you should identify the risks that can occur,
Yes,
not that they've occurred.
yes, yes. You as an auditor,
Okay.
the moment you know that there is a group or this is a group, you should be able to say, oh, by virtue of this being a group company, these are the risks that I am going to see. The client does not know this, right? You're the one who's the auditor.
Mm.
The client will not sit down with you and say, remember, before you start with the audit, I'm just no longer in audit, right? So I might have
Mm.
missing gaps here and here. Yes, Shalom is saying these are presumed risk. Yes, before we start into an audit, right, we need to obtain an understanding of the client. So we walk down, we understand, we said, oh, this is a client, this company is a group company, it has 15 subsidiaries. Oh, okay. By virtue, there is a transfer pricing policy between the two subsidiaries. They are selling to one another, and all of that you've understood, right? You cannot audit until you sit down and say what's really happening, right? In the happening part, we need to have a risk assessment. Risk assessment is now going to make sure that even the work that we do is sufficient and we can go back to say those statements are free from error, right? When you identify, you obtain this client, you obtain, and this is part of your planning, right? You cannot even formulate any audit substantive procedure or control because you haven't even started to understand the risks, right? We are planning. When we plan now, we sit down and we get the risks. What are the risks that we have at an overall level? Then we can go deeper and say now we are diving into this for revenue now. What could go wrong in revenue, right? When you would look at revenue, this is now when you're going to do it at an assertion level. Then on top of all of this, you also look at the control environment, right? Then you have the group in control at the risk of material misstated on an overall level. How do I look at this? I'm going to look at things like your integrity and behavior to find to see, is this questionable or not, right? Then you say, okay, great. How I don't what am I saying? What am I concluding on? Based on all those factors that I've mentioned, is the risk of material misstatement increased or decreased? I would also look at things that, okay, this might be mitigating all of this. Now you come down and you say, okay, I'm happy. It looks like, or I'm not happy. It looks like there are a lot of factors that are increasing my risk of material misstatement at an overall level. Then, if you are here and you're then assessing all types of risks, now you are able to say, hold on, it seems like the risk here is very high. If the risk is very high, this means that you're going to what? You have a lower materiality. A lower materiality just means that we're going to audit more things because our materiality we're going to say is 700,000 or 1 million. All our accounts here, we're going to audit them, all of them, because you now want to perform audit work on more things because you're saying the risk here by just looking at it is so high. What happens to you as an auditor if you go and say this financial statements are free from error and all of that, and it turns out later that it's not? Look at the KPMG saga and the VBS thing. They said this is okay. Comes back to your face to say who signed off this. So you don't want to find yourself there. That is the whole purpose of this to say how much work we do is also very much dependent here in the beginning when we are planning and we are looking at the risks. Make sense?
Yes, thank you so much.
You're welcome. So here you are, you're going to start. If you see a group, right, you need to look at this to say related party transactions give your managers, right? Give managers an opportunity to manipulate the apps. Why are you manipulating the apps, right? To manipulate the apps or results between related parties, between related parties. in order to increase profits. It is not every line that you need to start by saying there's increased risk of misstatement at an overall level. Please stop wasting time. Right? This is one of the first part. What's the next one that you can think of when you are looking at groups? There's an increased risk that there's an increased risk that related party transactions related parties transactions may not be
At
at
arm's
arm's
length.
length. There it is. By virtue still of this still being a part of a group, do you see that just knowing that okay, at least with group I can have this and that doesn't just end there. There's also another thing that you must have. So there's a risk that there is a risk that not all not all, because remember, we are going to audit a sample. So we are looking at it to say, there's a risk that we might not identify all related party transactions. So there's a risk that not all related party transactions, not all related party transactions are identified, except for identifying them. It might be that they are not disclosed or are not all are identified or disclosed. Remember, the client is the one that needs to disclose this in their ass, right? What's the other part? The other thing, when you're just looking at it by virtue of being a group, you say if there's three business combinations, is complex. And this increases the risk of error. Do you see that if you walk into this with saying, okay, if this is a group, this is what I must have. If this is what I must have, right? So another thing, if you see something listed on the JSE, you must not just have one thing. What are the things that you might think of that just by virtue of you being listed on the JSE, I must say, these are the risks that I'm seeing because you are listed on the JSE.
Or manipulation of profits.
Please repeat.
A listed company can also manipulate managers can also manipulate profits in order for the financials or cash flows to appear more.
Yes,
Um,
yes,
no.
that's true. So there is that part that there's a risk. The mere fact that you listed on the JSE, there are there are many strict rules and regulations that you need to adhere to. So there's a risk that you are not complying with the JSC listing requirements, right? The JSC listing has strict regulations, right? That need to be adhered to. There's a risk. There is a risk of non-compliance. There's a risk of non-compliance. There's a risk of non-compliance with the JSC. What's the next part that is there? There's a risk that management may there's a risk that management may manipulate the apps to meet the to meet or achieve the shareholders' expectations. Remember, you listed on the JSE, it means that there are people here, the public is expecting certain things, the people who invested or people who bought shares here, we are expecting certain movements. So now you have a very big incentive to do what? Or opportunity to manipulate this so that you what? You meet the shareholders' expectation. All right? This is you being listed on the JSE. There's something else. What day should you think of?
Wouldn't we also say that there's a risk that our estimates might be a bit biased because now we're expected to receive certain things. So now our provisions will be understatement. Okay, now the sentence is long, but what I'm trying to say is that there's a risk of bias in estimates.
Do you see that when you say estimates, you are telling me where the risk is sitting?
Yeah.
Is this you just looking at it at an overall level, or you're now starting to say, yeah, this is where things might be wrong in estimates, certain like you going somewhere there. You're now going deeper to say this is the line statement that is wrong.
Mhm.
Once you start going into a line statement to say something is wrong, you're no longer at a deeper level. You're now at an assertion level.
Yeah, okay.
Make sense?
Yes.
Here we're just looking at what, by just understanding this before, if you want to get this, say this is me before I even get any financial statement. You find out that you have estimates. I'm just looking at this as a whole. Make sense?
Yes.
Yeah. Now, what other thing can you think of? We're done with the JSE. What other things can we look at?
Management integrity.
Yes. Now you will look at management integrity to say that this I'll find the perfect words to say. You will say management integrity is questionable because of. Then you start listing all the things that you read about there to say, therefore, this increases the risk of fraud or error. I'm going to write it just now. Another one that you think of, if ever you read this and there's a tight deadline. When you say a tight deadline increases the risk of error. Why? Everyone is in a hurry to get this F signed, right? What else does it do if there's a tight deadline? It gives management the opportunity for fraudulent financial reporting. Because now we're not even going to include events after the reporting thingy. And also, you as the auditor are under pressure and are in a hurry. So, here it is. A strict or tight deadline may give management the opportunity, for fraudulent financial reporting. Right? Why? Which may be conducted by not including events after the reporting period. Does this make sense?
Yes, yes, it does.
If ever you see new management appointed, just think of what could this mean? This could be an issue now. You find you just took out all your key employees or your managers, and now we have a new management, right? How? There's a risk that this new management may not have the appropriate skills and competence, which increases the risk of error. On your note, you stated that due to being a group, there's an expectation from shareholders, from subsidiaries to report a favorable performance manager. Yeah, so this was a very specific question day on the subsidiary, the main group, the main company or the parent company was listed on a different uh, New York Stock Exchange, and then the subsidiary was listed there. So this is where it was coming from to say now there is pressure, expectation for subsidiaries to report a favorable because they are both listed. You hear? The good name?
Yes.
New management appointed. So there is a risk with new management. There is a risk that there is a risk. Do you see that the wording doesn't change? You just need to be able to say, is this applicable? And then you just bring in all your points. You don't have to think so hard about it. Do you see it? Like those things don't change. The wording doesn't change. You don't have to keep frustrating yourself to say, how do I do this? There's a risk that new management, there's a risk that new management may not have the appropriate tools and competence, which increases the risk of error. What else could cause a material misstatement when I'm looking at it? The mere fact that you have new auditors. Why? Having new auditors means that, or it increases, if you're a new auditor, you are, they tell you that you are a new auditors or you started auditing this and they, every time there's a new auditor, there's an increased risk that what? There's a risk that management may manipulate your their opening balances. And also, besides manipulating opening balances, you are unfamiliar with what? You are unfamiliar with their operations. Yes, new auditor management will take advantage to manipulate your opening balances. So you find that you are new auditors, and then you as being new auditors, you being the new auditors gives what? May give management an opportunity to manipulate. What else is there? Uh, Besides you manipulating opening balances, it means that the client knows that the auditors are new. Obviously, we know, right? The client knows that the auditors are new. The client knows that the auditors are new. And what? This will now give them an opportunity to fraudulently, an opportunity for fraudulently reporting as the auditor is unfamiliar with the client's operation. Let me check the messages. Yes, so it's that part to say fraud and error may go undetected. And then what else then would you think of? We said management integrity. We're also gonna come and I'm gonna come and write it down also. What is there also?
What about the new accounting standard being adopted?
Please repeat again, Mr. Lucinda.
What about when the company adopts a new accounting standard?
When it adopts a new accounting standard, it is starting to become very, very specific.
Is it?
Because it's the each line item will have its own accounting standard, like PPE. Now you're getting specific, and you're no longer looking at an overall level.
At the session level, okay.
Yeah, now
And override of control?
An override of controls now is at an overall level. You see an override of control. This is coming where we're going to look at it at management integrity. You're looking at all the all the weird behavior that's happening. This is where you start listing it under management integrity. So you come here and you say, management integrity is questionable due to the following factors and increases the risk of material misstatement.
Hi, sorry, Worry.
Hi.
Can you hear me? Can you hear me?
Yes, yes.
Oh, okay. I just want to take you back on the new auditors.
Yeah, let's go.
Okay, so on the new auditors, what if now the audit team that is assigned to the client doesn't have the necessary skills and experience to carry out the audit?
Oh, you mean with the audit team?
Yes, the audit team itself.
So we look at this. We look at this when we're looking at client acceptance. This is where we need to start looking at to say, do we have the? You remember, you're not supposed to accept a client if you don't have a team that has necessary um, skills and competence or time. So the moment you accept this client, when you don't have the recording, you're breaching your standards, right? Now you can't look at it here at a risk of material misstatement because you need to look at this before you accept a client. So you cannot accept a client where you don't have this. So my chat, if this happens, you're supposed to say you have breached this part because you should have considered the necessary skills and what you listing all of the things you should have considered. So you don't even get to accept a client when you don't have a capable team.
Okay, so that one doesn't come at the risk of material mistake because
No,
it's at the beginning of the stage
yes,
audit.
in a perfect or in this big company that is adhering to your ISO standards, we shouldn't have this problem.
Okay, I just wanted clarification on that. Thank you.
You're welcome. Hi, Tebogo.
Hi, Worry. Just a quick one. So, does that mean the what's it called? I think it's ISQM. Is something. Is it also under pre-engagement?
Yes. So ISQM is part of the very, 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 very first thing that you do when you get approached by this client who wants you to be their auditors. You start by looking at this ISQM to say, do we have the necessary skills and resources to take this client? And then you start by looking at all the things that you should look at. We're going to go into this as well. I also gave highlighters or indicators of what do I really look at, or what do I really consider when I look at what are the triggers that you should look at way before you accept the client, right? You're going to look at the auditor's independence and objectivity. Are you close friend with someone? Are you going for dinners and all of that? So you start by looking at the independence and objectivity. You look at long-term relationships. There's the partner, long-term friendships with the CFO, the CEO, and all of that. Are there any other non-assurance services that we are granting this company, right? Things like the scenario will talk about things like dinners, gifts, hospitalities. You look at this if they are there to say, will this impacts your independence because you need to be independent in mind and appearance, right? You look at things like your audit fee. The audit fee that you're charging, is it is it too much, right? To say the audit fee that you're charging. When you look at audit fee, look at is the client capable of paying an audit fee. If they tell you that the client is going through financial struggles and all of that, you're like, the client seems like they're not capable of paying the audit financial fee. Or if they say they've been doing well, you say they're capable. Therefore, you must accept. But if they're not capable, those are some things that we shouldn't accept, because are we really going to give them the best team and the capabilities if we can tell from the beginning that they can't pay the audit fee? Then you don't even go to accept them. You also look at, do you now depend on them up there on your objectivity? This client makes 80% or 90% of your revenue. Then you just, they're like, I cannot, because now I'm going to be biased. All right. This is the significance of the audit fee. Now you go to management integrity and business risk. You're also looking at this to say, people really the people you want to be associated with. So you need to say we need to also consider management integrity and ethics. You list the things that are saying this, I know your integrity here and here and here, and then you say this is questionable. You go on to look at your staff's knowledge and expertise. Now you're looking at, do you have a sufficient team? Are they well experienced? Do they have the expertise? Do we have the correct things to audit this thing? You look at anything of unethical behavior by your staff, right? Or you look at limitation of scope. Is the things that you're saying you will not give me access to, are the things that you're saying I cannot audit, and all of that? You, while still on super staff with expertise, you look at supervision. Is the time for this? Are we incentivizing our audit team to finish things or whatever? Now people are being biased. Now that is what you look at when you're looking at your client acceptance. And this we look at before you say, yes, I will audit you. You cannot obtain an understanding of someone that you haven't sat down as a whole team and say, should we take this client or not?
All right, makes sense. Thank you.
Everyone happy?
Yeah, happy.
So here, you started by saying management integrity is questionable due to the following factors and increases the risk of material misstatement. Now you're bringing the things that you are reading that you're like, hey, there's a bribe, they didn't do this, and now you are bringing in the things that to say, this is what is happening. Sometimes it's not just integrity, right? Sometimes they might come to you and say, you read there and you sing Hyman, this company is non-compliant with King 4 and all of that. Then how do I write it, or somehow do I word it? You come here and you say there is a risk of non-compliance. is a risk of non-compliance. Then you mention this and say, therefore, the control environment of this company is inefficient. Then, okay, can I look at the messages before I go further? Yes, then poor governance. This is that part where the King Fu is looking at. Going concern risk. There's also risk on non-compliance with the regulations of the industry. That's correct. Now you go here and you say you say there is um the going concern part. This is how you write it down. And you mention all the things that this company is going through that I can say, hi man, this company looks like it is in financial distress, right? So you say there is a risk that there is a risk that the apps are prepared. There is a risk that the apps are prepared on a going concern basis. Going concern basis means that this company is operating smoothly. You are supposed to be operating, and it's liquid, there's money, and all of that. Now there's a risk that we did this on a going concern basis. Can't you? Are not a going concern basis, right? So they're saying there is a risk that the apps are prepared on a going concern basis when they actually should not. Given that, you can't just tell me that there's a risk that this is not a going concern. What's making you say this? There's a risk of you doing this. Given that, then you start mention all the indicators that you see of the company being in financial distress, such as you read it there, you find it in the scenario to say their performance has been wrong, your revenue has been what for so long. You mention all of them. Hi, Amkela.
Good mornings. Am I audible?
Yeah, good morning to you too at 8 p.m.
Oh, sorry, it's an afternoon. Sorry. Yeah, good evening. Sorry. No. I wanted to ask if incentivized management incentives like bonuses, does it form part of risk of material misstatement
It
overall?
does, it does. And that's actually where I was going to go there to say
Okay.
if you ever see performance bonuses, does because I want to get my bonus, right? So you have to say that management have the incentive. Now it's not an opportunity, it's an incentive to say, I will get rewarded if I do this. There's something that's driving you to do this, right? Management have the incentive. Management have the incentive to manipulate the to fraudulently manipulate the apps to receive, you can say whether it's profits or whatever it is that they have to receive. And you say this when the scenario tells you about this. The scenario doesn't tell you this. You don't go and mention this, right? Because you're now setting your own paper. Do you see how easy it is to get total in this type of questions?
Yes.
Worry,
Mm-hmm.
would inadequate IT controls also be a risk of material misstatement?
Oh, please repeat. I didn't get you.
Inadequate IT controls, like
Uh, Inadequate IT control is you are looking now at the integrity of the management to say you're not even following your controls properly. You put it there. Yes, it increases your risk of
so it
material.
falls under that our control, override of controls.
Yes, it falls there. And you're putting it where? Who's overriding? Is it where is it sitting at? It's sitting there on the integrity because on the integrity
Management.
you're bringing all their behavior.
Okay.
Make sense?
Sorry, just one last question.
No, don't worry.
When the company is an internal audit team,
Mm-hmm.
would there also be risks around that the audit team doesn't function properly? Obviously, maybe if the scenario gives that
If the scenario
key
gives you
point.
that, I would want to put it there on the behavior. Maybe the people who are there, there's some who are in top management. But you see, some people of the audit team, internal audit, are part of management.
Mhm.
Yeah. So I want us to just read the scenario together and see if, yes, CPC, if there are any fundamental principle risks, that will be a cause. Yes, now you go on. But the CPC, I want you to put it at the end because CPC, you can put it there with your poor governance or something up there and say this. But I want you to put this at the end because there might be a CPC question and you don't want to finish time here when you can go and get something else. New accounting software. Yes, a new accounting software would be a ROM issue. Why? It's not so different from new management. So there's an increased risk of error. Does it make sense? Nhlokonolo, the CPC part, before you dive into it, yes, it does increase to say now if there are fundamental principle, uh sometimes now we're looking at if what really comes onto the principles, if there are risks that you are thinking, it's still we're looking at your behavior, your integrity. Do you see it? And then you dig down onto what? You dig down onto this when there's a question that is specific there for CPC. I think
Hi, Worry. Also, please explain this one. I always don't really understand. I can't get my head around the IT system being centralized and decentralized. Could you please explain how that is a risk? Because I don't really understand it. I just write for the sake of writing, but I don't really understand.
no, you must not. You must not write for the sake of writing. So the centralization part is for very big companies, right? I'm assuming
Okay.
that's what you mean, right?
Not. I don't know. I just cram the centralized system, so it's that I don't know. Everybody has access. I'm not. Oh,
Okay.
or maybe I'll just ask. Go through the memo and I'll send the question on.
Okay. Uh,
Yeah.
how can centralization increase your risk of material system, right? So there might be, you see, let me find the first thing. One, because let's say this is one company, it's one big company, it's like what ShopRite or whatever, right? And then the whole IT system thing, so we centralized all of this IT thing. It just means that this is one big thing managed here, or it's looked at by the, do see where I'm trying to go to, right? Now, what increases the risk? There is a risk that if there is a weakness in this IT system, it affects transactions and data across the entire organization. Do you see it?
Yeah.
We're
Okay.
all centralized on this one thing. So we are saying that if there is a failure or a weakness in this IT system, it does not just affect you only. It affects the data and transactions across the entire organization, right?
Okay. Yes.
And also now you are coming to say that this thing, because now it's so widespread, right? Let's look at who's really managing this. It would be easier for people to now like, what can I say, control points that are centralized creates an environment that is more open, or it is more susceptible to management overriding controls, because now we could find that there are just a few key individuals who can bypass every single thing.
Okay.
Does it try and make it sense a little?
Yes. See the light. Thank you.
Okay. Can I check the message that came through here? Yes, decentralization. And except for decentralization, another way that we can mitigate this is make sure that we have more monitoring and reviews of this, because we know, and this needs to be done on a timely manner. We need to have more automated controls to say you cannot do this, the system must block you out, and all of that. People must have limited access and functions. Does it make sense? We're all together, ne? Someone says grammar, wait. Yeah, but it's correct. So here it is. I want us to just go through this. You're an audit manager at Zeston Inc., one of the largest global medium-sized audit firms. You have been assigned to the 30 June 2024 financial year end of Sky Gourmet Limited. Sky Gourmet's shareholders recently appointed Zeston as their external auditors at the previous. What are you saying? Sky Gourmet's shareholders recently appointed Zeston. So this is a new auditor, right? You're going to bring in those words word for word to say there's a new management have an opportunity to manipulate the opening balances. Management may have an opportunity for fraudulent reporting because the auditor is unfamiliar with their operations. Happy? Zeston's audit software is fully compatible with operation-wise. Okay. Sky Gourmet established in 1990 is a leading provider of in-flight meals, snacks, and beverages that major airlines serve to their passengers on board flights. Since incorporation, Sky Gourmet's experienced strong growth, resulting in the company's listing on the JSE. Do you see now? You bring in all those JSE points.
Yes.
You mentioned that the JSE has strict rules and regulations that need to be adhered to, so there's a risk of material misstatement due to non-compliance. The other one is that there's a risk the management may manipulate the apps to meet the shareholders' expectations, right?
Yes.
Even see this part. To align the directors' and shareholders' interest, the board resolved to issue shares to all Sky Gourmet's executive and non-executive directors. This decision resulted in the board members collectively owning would you not manipulate to increase your share price?
Yes.
So
Yes.
here you are to say there's an increased risk due to the management having shares. There's an increased risk. There's a risk or there's an incentive to manipulate this to increase your share price. You have an incentive. If you're going to be awarded for something, it's an incentive. There's a gap, it's an opportunity. Ne? When I check the message. Yes, exactly. Sky Gomez customers are solely airlines. Sky Gomez has several existing long-term contracts with major airlines and as such has branches close to all international airports in South Africa, including OR, King Shaka, and Cape Town. Each branch has its own warehouse and kitchen to fulfill the orders. The head office is situated in Sandton, Johannesburg. The industry that Sky Gourmet operates in is highly competitive and is extensively regulated. Something is extensively regulated. There's a risk of non-compliance. This industry is extremely regulated, so there's a risk of non-compliance with the rules and regulations of this thing.
What would you say that would you then say with the non-compliance with industry rules and regulations or what?
Yes,
Is
non-compliance with
is that
industry.
not? Mm-hmm.
You were saying?
I wanted to ask, is it not like I think in one of my I think it was in test one, no, in test two, I wrote something similar to that, and the comment was just like the person just said very vague. So
You must not start by just saying there's a risk that you're not there's a risk that you're not adhering to the rules and regulations. What is bringing this? The industry is extensively regulated. So you need to start by saying the industry is extensively regulated. Therefore, there's an increased risk of non-compliance with this industry's rules and regulations. If ever you read some of them and they tell you which one, then you can mention them.
I think I might have been I might have not stated that
Yeah.
the precise industry or whatever. But okay, I understand you. I understand
Mhm.
you.
Then Zama says non-compliance with King 4 committee requirements, non-executive 20 shares. You see now, they are making assumptions for yourself. This part, non-compliance with thingy, 20% shares by the board. Is there anything that says the decision resulted in the board members collectively? So now you want to give yourself things that are not there. Do you get what I'm trying to say? Rather just keep it at, because now you have this shares, you have an opportunity to manipulate the what? To manipulate the things. You could manipulate the Fs because you have an incentive to increase the value of your shares.
Okay, so I just look at the line where it says, in the directors and shareholders' interest, the board resolved to issue shares to all Sky Gourmet's executive and non-executive directors.
That now there when you then you like, oh, you now have an interest. What does it mean? You will manipulate the apps.
Okay, thank you.
Yeah.
I worry.
Right?
Can't you also say there's a risk that there's non-compliance with Companies Act since they are issuing shares to the executive and non-executive directors?
This decision resulted in the board members collectively to align the directors' and shareholders' interest. The board resolved to issue shares to all Sky Gourmet's executive and non. If we now need to go read more about this, if there's no more, then yeah. But I don't want you to speculate now at this point. Only then, when you are asked to go into Companies Act and maybe there's more to this, then you can read Was the approval or was the resolution by shareholders? If there wasn't, then you can now go to say no mention has been made when you are going deeper into Companies Act.
Okay, no problem. Thank you.
You're welcome. High competition decline, Sky Gourmet thingy. A decline in market share is there. It's an indicator before you even get the before you even get the before you even get the apps and all of this. Now you're saying there's a risk that there might be a going concern thing here to say there's a risk that we have we have prepared the financial statements of Sky Gourmet as a going concern, whereas this company actually is not, due to the following factors. Then you start mentioning that the share has there's been pressure on profit margin and it has resulted in the loss of some long-term contracts. Do you see now? They were very straightforward to giving you. You're not making assumptions that you might be in financial distress. You're reading to say, hi man, you've lost your largest second customer, you've lost a long-term customer, your profit margins are down. Now this is part of your going concern thing. You put this wording first to say that there's a risk that the apps are prepared on a going concern basis when they actually should not, given that one, Sky Gourmet has lost its second largest customer, who is also a long-term customer. There's pressure on margin sales. Then you can bring in all the other ones that you see as you read down. Does it make sense?
Yes.
And also there have been several new market entrants. So this is also your competition thing to say this could be causing my financial distress. Sky Gourmet Sky Gourmet has a highly qualified team of accountants who oversee its financial reporting system. The company utilizes OperationWise, which is a sophisticated ERP system that integrates all Sky. Yeah, here you are going to shine with that cramming to say that this centralized operation and accounting finance functions. There are robust internal control exist. The robust internal controls exist relating to processing of transactions, including segregation of duties and reconciliation. This results in a mainly paperless control environment. Okay. It has arrangement in place with the firm in control that provides the internal audit function. Okay, great. As at the beginning of 2024, Sky Gourmet had two departments, the prepared meals and then also the logistics. Now, significant events. Of late, Sky Gourmet's logistic department encountered various complicated and expensive logistical challenges related to airlines operations becoming more automated. They decided to shut down its logistic and acquire Deliver Base Ltd. Deliver Base specializes in such logistics and can more. When you acquire another company, you now become a group, and now we are trading amongst each other, right? The acquisition of this now makes it a group. You say there's a risk that the related party transaction between Sky Gourmet and Deliver are not at arm's length. There's a risk that we haven't, not all of this have been identified or disclosed in terms of IS 24. If risk 3 business combinations or consolidation is complex, therefore there's a risk of error. Do you see this?
Sorry, Wori. I see under the questions that we should evaluate and conclude on the risk of material misstatement at an overall financial statement level, only for the introduction.
Oh, it
of
was
the
only on the
scenario.
introduction of the scenario. So we're going to just end there on number 1, right?
Yeah, but it's like 18 points. Ooh,
Let's see. This part of the introduction. It's still part of the introduction. Number 1. Oh, significant events.
Yeah.
Doesn't it end here? I'm not sure. Let's go look at this. Is it required? With reference to the introduction section, evaluate and conclude on the level of the risk of material misstatement. No, you were going to get this marks, guys. Remember, one thing has so many things.
And it also says separate, not group.
Oh, still, besides the group, we mentioned quite a lot. Let's go back. You will see one thing could have one or three things. You recently appointed new auditors. You're going to bring that two lines. You manipulate your opening balances. The client knows that the auditor is unfamiliar, so there's an opportunity because what the auditor is unfamiliar with your thing. You are listed on the JSE. You mentioned that there are strict rules and regulations. Financial manipulation of apps to meet the shareholders in thingy. There is incentive. So far we've spoken on four. There is incentives. Management now, since they're receiving the 20%, there is an incentive of what? There's an incentive to fraudulently report, right? You're five.
Mm-hmm.
uh Going concern, they are market entrance number. You get the first point to say that there's a risk for this going concern that were first line due to the following factors. There are new entrants. You have lost your number two. You're going to say you've lost your major second largest customer. What now? Eight. This one are extensively regulated. Nine. What else is a going concern issue? The fact that they were having so many, they remember this part that up there, the department was closed. You'd closed the logistics department. You were also going
Okay,
to
I
go away.
understand.
You were also now going to go to your, what is it called? You were going to go to that part that we're saying this is one centralized and all of this, right? You were supposed to touch on that to say, okay, when I'm looking at this, oh, my voice is going away. When I'm looking at, just give me a second now, my voice is going zerun, zerun, zerun. You are also going to look at the fact that due to you having a centralized thingy, what must happen? Sorry, before we even go there, on the going concern one, there's new competitor, there's pressure. You've lost your second largest thingy. And now also you're in a highly regulated thing, so now it further increases what? Your pressure or your cash flow.
So would it be beneficial to us if we say, for example, under the going concern, once you stated that there's a going concern issue, that you mention or you discuss each like separately, not in one sentence. Like this, like this is
Yes,
a going
yes,
concern, and then this is a going concern as
yes. You need to
as
mention.
opposed to putting it in
You
one
mentioned this thing
sentence.
is, oh, it must be its own point.
Mm.
The use of this ERP system. What does it mean? There's a risk of, because now we're using this, we are all together in this ERP and we are paperless, right? So what does this mean? There's a risk of unauthorized access or changes to financial information. Remember, this is on a system, right?
Yeah.
And also, let's go back to that required. I want to show you something. It says evaluate and conclude on the level. So they don't just say what is you're also going to conclude on the level of the risk of material misstatement. If ever a question says evaluate and conclude, right? And you see that this is so much marks. If it has 10 marks, you end here. Guys, if you see that this has 18 marks, you just don't end there. Look for the things that are decreasing or mitigating these risks. Yes, these risks are there. But also, what am I saying that is decreasing this? If ever they tell you and you seeing that this is so much marks and you just limited me to just one thing, and there are positives there, then I will say the following factors decrease the risk of material misstatement. You see that this is more than 10 marks, you're giving me 15 marks, and you say I must also conclude on the risk of material misstatement. I cannot just conclude if I, yes, the risks are there, but are you not supposed to look at factors that mitigate this risk?